Thank you, Dave, and good morning, everybody. Thrilled to be with you and lead off this June Festival of Traders. We're going to talk about speed, high velocity. If you're trading options, especially short-term options, you need to get the momentum on your side in short order. So I want to walk you through that. I'm curious how many of you have traded options. Type a Y or an N in your chat box. Love to get you interactive in today's event as we get things rolling and kind of get a feel for how many people are already trading options or not. If you're not, don't worry. Appreciate the feedback there, Kevin. We'll guide you through a really simple way to implement this. You can bridge yourself over from stock trading into options trading very easily. So to get things rolling, let me just remind you that the information provided in this presentation is based on our proprietary research, and it's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but also they have large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. You can see our terms of use on our bigtrends.com homepage for more information here. So what I want you walking away from on my presentation today, and we've got a bunch of great fellow traders, so definitely stick around for a bunch more insights. But I've been trading options for 35 years, and one of the things that's nice is when you can just find a price action pattern where you don't need to use any indicators. I've got a variety of different systems that use indicators, but this one is just pure price action. So the idea here is that we're really looking for a pattern in the price action that can really set us up for putting the odds in our favor. Let's face it, we're not going to win every time. You've got to know how to manage not just winners, but losers. So we're going to walk you through both with success stories as well as not success stories on what we did if a trade didn't work. So what we do in either case. And then we'll walk you through the system. We call it quick options doublers. We're looking to double these options oftentimes in a matter of a day or two. But we're going to walk you through this pattern, how you can do this. And the beauty of this too is if you're a small account, you don't have to worry about any day trades with this system. We get in one afternoon, the earliest we can get out is the next morning. So that's also keeping it simple. If you don't know me, I've been trading options, like I said, in stocks for 35 years, finding options strategies that then I've been teaching my Big Trends community for the last 25 years. I launched Big Trends in November of 1999. And blessed to be serving folks for the last 2.5 decades with a systematic approach. And just everything that I trade and teach is based on an edge, right? If you've got a quantitative advantage, everybody these days is talking about AI. Now Apple's joined in on the AI hype and popped up a bunch in the last 2 sessions. I would equate it to that we're probably not in the late innings, but in the later innings of the game on AI from a stock perspective. It's legitimate, but my thing is that we've been doing systems for our Big Trends community for 25 years, using the power computers to unlock advantages and played the probabilities in your favor. For me, quick history lesson, I caught the trading bug after the crash of '87. I was a student at Duke University, got into a trading contest for college students, AT&T Collegiate Investment Challenge. I remember about 14,000 students in there. I took the Warren Buffett approach right after the crash, saying, okay, well, gee, it seems like Procter & Gamble, Gillette, Coke. I remember buying those 3 and thinking, you can't go wrong buying those, right? And obviously in the super long term, that was a pretty good idea. But in a 4-month contest, I got my statement with a month to go, 3 months in, and I was in the bottom 25% of participants. So I said, maybe this value buying thing's not for me. Of course, the value buying, if you've got the patience, can work, but not for active options trading. I went with a more active trading approach in the final month of that contest. Started to scalp. I didn't even know what that was called scalping at the time, but started to basically scalp hyped up takeover rumor stocks back down for a day, and that short-term pattern worked and took me from the bottom quartile to the top 1%. They even sent me a letter saying they hadn't seen such a big comeback in the final month of one of their contests. So, I was like, yeah, this is what I want to do. I said, look for these patterns and switched majors, graduated on the 4-year plan at Duke was my dad's only requirement, and said, look, let me become an analyst, and ultimately head of research in the 90s for the nation's largest options newsletter. But got them into the internet and realized the power of the internet to really, frankly, level the playing field on really getting quality information out quickly without a lot of cost, right? So after playing golf for 6 months or thereabouts and said, look, I want to go back to my passion, which is trading, and November marks our full 25 years in business. Also blessed to be featured in Barron's Magazine on September 11th of 2000, a year before 9/11. I said, watch out below. As we're just starting to come down off that Y2K, kind of everybody's relieved. So they were buying tech stocks out the wazoo, I must say, in the middle of 2000, and the market's dropping, yet all the sentiment was to buy the dip. in tech. As we all know, in retrospect, that was a huge mistake, right? So we watch sentiment, we watch what the rest of the crowd's doing, try not to get yourself too much on the same side as the bulk of the crowd, right? You're looking for kind of unconventional wisdom, and so that's what I'm going to seek to teach you. It's some unconventional wisdom, and I think that's what's helped me to be inducted into the Traders Hall of Fame back in 2007 by Traders Library, joining a lot of my fellow trading heroes. And my goal for you is to learn, not just from me, but all the fellow traders here, to say we can help accelerate your journey to get you where you want to go, but find something that works for you, that resonates with you, I should say, as far as for principle and what you're trying to accomplish in your own trading and investing, and then work with that particular idea. Don't try to do too many things at once. It's like any habit. You got to focus on building one good habit at a time. You can focus on building one good methodology into your trading and investing plan. The one thing I ask throughout all of our presenters today from you is just your full attention, which seems like not much to ask, but actually it's a lot, because there's a lot of distractions out there. It's proven that multitasking actually lowers your IQ. Our goal here today for you is to boost your trading IQ. So put away the other distractions, focus while you're here to really soak this in, because stuff that for me has been 35 years in the making, trying to kind of get you down to the essence of an opportunity that you can take advantage of on a regular basis. So let's start with a recent winning trade example, then I'll go deeper into the system for, we call it quick options doublers, as I said. And so, like I said, pure price action patterns. And again, remember that all these examples here, past performance can never guarantee future results. And next time we get a Spotify trade, it might not work as well. It might be a loser. But we assume, okay, if you invest, say, up to $1,000 per trade with this system, then that would mean that if we're making a recommendation back here on April the 3rd to buy the April week 1 287.5 strike calls, we paid an average of $3.82. Now, what does that mean for an option trader that basically says, okay, look, I'm going to pay $3.82 to control 100 shares. You got to multiply that times 100. So one option contract that controls 100 shares would cost you $382. So if you're investing $1,000, that would mean you could get 2 contracts in for about $764 before commissions. But as we know, commissions have come down dramatically to $1 or less a contract with no ticket charge. So it's really the best time in my 35 years to be an options trader, in terms of you get to keep the vast majority of what you make. But the key here is that, what are we looking for? We're looking for this pattern, and we're looking to double those options, right? So we're looking to take that 382 up to about 764. We got out at 770 the next day. So what were we seeing that made us want to get in, and where did we get in? We got into this one here in the neighborhood of about 292. I'll take that back, maybe 291. Okay, so basically it was about $3.50 in the money. So maybe it was 292, but basically $3.50 in the money is 291, and then basically about 30 cents a time. So we weren't paying a lot of time. Why? Because we're buying the week 1 options that are going to expire just a couple days after we enter. You say, well, wow, that's really trading it close to the vest, close to the expiration. We'll never take something through the expiration to let it turn into a stock position. We'll always be out before the expiration. Our maximum end date would be an hour before that Friday close on April the 5th. But the goal is you can take advantage of a very leverage situation here, because you would pay over 29 grand to control 100 shares of stock, right? The stock's trading 291. So $29,100, instead of paying that, you pay $382 and you get the same type of effective control for a couple of days of action potentially. Now, we're getting in near the close of that day on that circle there, because we want to make sure that we're getting our pattern, checking our boxes here. And so what we're looking for is, we're looking for 3 higher closes coming into a trade, and 2 days coming into the trade in a row where we're getting a close above the open. So you're getting the green candles, which in this case just shows that white open body there in the candle. Those are higher closes relative to where they open. So we'd had actually 4 of those, and we'd actually had 4 higher closes as well, right? You can see all the way back to 1, 2, and 3, and 4, right? We don't need to get that many in a row, but basically we need to at least get 3 of those higher closes, along with 2 fresh momentum upside candles. So when we're buying in there at 291, and we're saying, well, what do we need to happen to double our money? If you're buying a 287.5 call, for those who are new, that's a right to own the stock at $287.50 for the next couple of days is what we're controlling. You say, and sometimes we might have 3 days to go before the expiration. It's more about catching really the follow through day. The next day is where most of these opportunities are going to get cashed in. So what we're going to say is, okay, well, we've got to write down at 287.5. That means that to take 382, if we went up, say, 7.5 points in our favor, that would take you up to 295, right? It's 287.5 plus the 7.5 points. And so we need like 770. So that's technically like 295.2 if we had no time value left in the trade, right? We paid about 30 cents of time value. So we're assuming not much time value is going to be left in this. As it goes more in the money, you lose time value. But the beauty of this is you only paid about 10% time, about 32 cents a time, and $3.50 of your 382 was intrinsic value, meaning that if it didn't move at all, you're only losing about 10%, the time portion of the trade. And what do we do on the losing side? If it loses half of its value, we blow out the trade. We take it out and try to set it up so we can make doubles and at maximum lose 50% and let those things start stacking in your favor, right? Because if you're investing $1,000 in each trade, you make 1,000 on a double, you lose 500 on a 50% stop out. Then you're saying, okay, I do that enough back and forth, rinse and repeat. You can start to stack up some pretty nice gains over time. Obviously, we can't guarantee what the future is going to look like. There's going to be winning streaks, there's going to be losing streaks. You have to make sure you're not overcommitting your capital on any one trade. Okay, be really sensible about your capital allocation, no matter how well the system's doing. So the next day, look at how high it popped. It popped to 304, and you say, "Oh man, we left money on the table. We only needed 295-ish." At 304, what would this thing have been worth? It would have been worth, you can see here, like 16.5, right? So you're talking about instead of making double on your money, talking about possible 4-bagger, and I don't care. I don't care if it keeps going. What our system says is take the double and be happy with it the next day or two, and not get greedy. So we're just trying to kind of execute this strategy consistently, take the money out as the market makes it available to us. We don't try to trail stops because, of course, these things are volatile in their final days of their life, tracking the stock. And essentially, you can see something like roughly what is that, about maybe we're almost 300. We're basically at about a 75-to-1 leverage ratio theoretically, right? So with that kind of leverage, you want to make sure you're ringing the register when you get that chance of a double or better. So the pattern is setting up for those big momentum opportunities. Now, this strategy also, it can work not just for bigger accounts, but for smaller accounts, right? Because our average contract price so far year to date in 2024 has been less than $2 per contract. So that's less than $200 to control each 100 shares. So, if you're investing $1,000 on average, you're going to get at least 5 contracts on average, even though that last example we only got 2. We didn't get our full $1,000 to work in that Spotify example. So the idea here is that, look, whatever we're trading, the goal is we're going to look to be in and be out in one afternoon to the next day or two, never a day trade, and looking for these quick pops in our favor, basically catching the follow through momentum. And what's important is that, as you look at the daily chart, is that, a lot of times, why do we get in the final hour? Why not get in earlier? Because a lot of times that early action can be a fake out. You want to know that your daily candle is setting up properly to show us that we're getting the strong end of day push. A lot of times the first hour of the trading day is called amateur hour. It's where a lot of the smaller or amateur traders get faked out with stops and stuff below the prior day's low, and then it flips and reverses by the end of the day. You see that all the time, including, I believe, yesterday you saw that. We opened lower, closed higher, right? So then we followed through today to the upside. So that kind of follow through momentum to say, what are the institutions doing? Typically, they're placing a lot of their bets into the final hour of the day when they see how the pattern is setting up to be positioned for the following day and beyond, right? So the idea is that we want to align ourselves with those big fish, with those big institutional money flows, and say that's going to be your goal. So we'll get an alert out via real-time email. You can also get it as a smartphone update via WhatsApp. Once you get signed up, we'll tell you about that. But the idea is that it's really simple, really clean, really easy to follow. We're really about no spread trades, nothing fancy. We're not doing any option sales. We're actually saying, look, buy an option when it's time to close it, close that same option. What I find is that as I go down the intraday time frames, I get a lot of noise in my charts, and I'm kind of a true trend trader is my goal. I want to let the trend be our friend and be your friend and set you up to keep riding it and following through. So we want to minimize the fake outs. We can't get rid of all of them, but we can definitely minimize it. The other thing that helps a lot, and what I think people are paying us for, is to say, look, you could follow this pattern yourself if you're willing to follow the markets all day, every day. But the idea is that, hey, a lot of people want to enjoy their time and not just be stuck glued to having to watch a screen. So we do that for you. But we also do this thing that I call profit factor filtering. What does that mean? What is a profit factor? A profit factor means how much are you winning, which everybody always asks me, what's your winning percentage, right? That's one of the important elements of a system, but it's not the only element. It's also about how big you can win and how small relatively you can lose, right? So if you can make doubles and lose 50%, you can see that'd be a 2-to-1 size of win to size of loss on average if you can do that consistently. Obviously, we know that the future is going to vary, but the idea is that if you have that kind of guideline to say, look, even if I'm making twice as much as I'm losing on average, I don't have to have a 90% win rate. I can have a 50%, even a 40% win rate and still make good money with that methodology. So you have to know that there's a lot of ways to meet your goal, and it doesn't just have to be through a pure high win rate. Because a lot of those super high win rate systems, by the way, when they get hit really hard against you. So we want to make sure when we lose, we don't lose too much relative to easily making that back up and more on a good winning trade. So what's the pattern again? We're looking for at least, in this case, 3 consecutive higher closes for long signals. If we're looking for bear signals, which we'll talk about too, we're looking for 3 lower closes on a downside momentum setup. And then the back-to-back, the 2 in a row going into a new trade have to be showing us the momentum on our side, right? Meaning the green bars, meaning we're closing above where we open. So you could open lower and close back up to just slightly higher versus the par day's close, and that would check the boxes even if it didn't look that impressive, as long as it's closing above the par day's close and you're getting the positive momentum from the open to the close, okay? The exact settings are not given away here, but you do get them when you become a subscriber. So the idea is that it's not a black box for subscribers. We just ask that you keep it to yourself, but that you actually get a rule sheet that gives you all the parameters, all the inputs, so you can follow along for home gamers as well. But basically, look at performance since inception. Again, remember, the past can never guarantee the future. This is just looking backwards, saying how is this system done, going back to all the trades that we tested and traded since the beginning of 2020. So remember, you've got the COVID pandemic, 30% market decline in there in the first quarter of 2020. You've got the bear market of 2022, which the rally back up last year, basically in the S&P, just erased the losses from the year before. So you had basically a flat 2 years for the S&P, 2022 through 23, roughly speaking. So look, while that's flat, we're sitting here grinding out lots of opportunities on both the upside and the downside. So $5,000 portfolio would have grown to just over $30,000 gross before commissions and before subscription investment. But the key here is that, look, we're never compounding the amount per trade. We're sticking with no more than $1,000 per trade throughout that, right? So while that would have been 20% of a $5,000 account getting started, now at a $30,000 account, you're talking about 3 1/3%, right? So the goal of that is to say, when you compound and try to grow too fast, a lot of times my experience is that you will give back your profits too fast in a drawdown phase after a good run. So by keeping that steady dollar allocation, we found it actually promotes consistency in how you can extract money from the markets. In this case, a 504% gross profit on a $5,000 account turning into 30 over that last 4.5 to 5, or not quite that 5-year mark. So then crushing the market because of some of that market downside volatility that had to then make up for. So how about some more trade examples? I know charts tell the tale. Let's look. We blessed to pull up some more recent charts here. You can see here's one that we had just this past week or so in C Limited, not a household name, ticker SE, but it's one that actually has a pretty nice profit factor on this system. What's interesting to me about this system is when you saw the gap down, you can see there's the gap down before, put a big G on it. You'd think, well, gee, this thing's broken to the downside. No way I'd want to trade calls on it. But based on our system parameters, remember what we were just talking about, you need 3 higher closes, 1, 2, and now when we get in here in that third afternoon, that third higher close there, we're getting in there, you can see in the neighborhood of about 70 bucks. We're buying a 69 strike call. So this was on June the 4th. The expiration was going to be June the 7th. So this one actually had an extra day compared to that last example I showed you on Spotify. We basically have, the 5th, 6th, and 7th. We've got in on a Tuesday afternoon and out by, we got to be out by Friday's close. We're out before then. We're out on Thursday. So notice by buying a 69 strike call, the nice thing about the weeklies is they tend to have better and more strike price choices. Like in this case, like 1 point strikes. In some cases, you might even see half point strike price choices. So you've got lots of different options, pardon the pun, but lots of alternatives that you can choose from here. So when you buy at the stock's at 70, you buy a 69 call. That is what we would call a buck or $100 per contract in the money. You're paying 158. So you're paying just over a third of time value if the stock's at 70. Right. So, but the advantage here is that since we have the 3 days to go till the expirations, we're saying we think we can make up that 58 cents, 58 bucks a contract, meaning the stock needs to move just over a half point to get us to our effective break even at expiration. Okay. So that's less than 1% it has to move. Well, you can see the very next day, it actually moves up from 70 to 71.5. So it's 71.5. What is that? Option worth? Well, it's worth about 2.5 intrinsically, right? You can see we're not picking up a whole lot of time value here as it goes more in the money. Like I said, the time value will diminish as the option starts to move more and more closely to the stock. It's what I call a stock surrogate or a stock substitute mentality, that you're saying, look, I want to control this stock for the next few days. I don't need to buy and hold the stock, but by controlling it just for a few days, I put myself in a position here to say, okay, we believe that we can get up to close to our target here. We didn't quite get our double. We got close. We said, you know what? We're getting right back into the old resistance level. We said, let's just not be greedy and let's take it out at 285 and take the 80% gain. So on $1,000 in a maximum investment, you could get how many contracts? You get about 6 contracts here. So $158 times 6 means you're in for like 948 bucks, right? So when we get out at 285, that means on each of those 6 contracts, we're making more than 125 bucks times 6. So it ends up being 762 bucks that we make gross before commissions. Remember, 6 contracts in, 6 contracts out should cost you no more than 12 bucks. You'd still have at least 750 bucks net after commission that you put in your pocket and put back into your account in profit on this trade. Again, past performance never guarantees future results, but we're saying the idea is we'll tell you when to get in, we'll tell you when to get out. And in this case, we kind of managed it to kind of say it was close, but we were concerned about letting it slip away. So we just took the 80% and ran. Here's another one with Amazon that got its double the next day. And this pattern, it doesn't look like Amazon's doing more than just a trading range here, right? But what's interesting about this is, remember what I said, the higher close. On that red candle going back 3 bars, when I'll mark it as the first higher close, that is ever so slightly a higher close than the prior bar's close. It's not by much. You say, but that's a red candle. Doesn't that make it a problem? No, because then we say on day 2 and day 3's higher close, you can see that we're getting the 2 and 3 bars are both higher closes, right? So we're getting that positive momentum into the end of the day. Stock's trading here around 178.15 when we got into it. You can see that we bought the 177.5 calls. Now these only were about 65 cents in the money, right? It's Amazon. So you do have to pay a little more to play with Amazon. This is back in March 20th. We bought the week 4 options that were going to expire at the close on March 22nd. So this is a Wednesday afternoon entry. We only have basically 48 hours or so to go before we would close it out. If we get in at 3 o'clock on that Wednesday, we would be out. No, the longest we would ever hold it would be under the 22nd at 3 p.m. Wall Street time and Eastern time, an hour before the market closes. That would be our final, like, we've got to get out, win, lose, or draw at that point if it hasn't hit its target or its stop. But in this case, it did get to the target. Why? Because what do we need that 185 to go to? We need to go to 370. Add 370 onto your 177.5 strike price. That's your right on a call. It's your right to own the stock at 177.5. So add 370 to that, and you say, well, that's 181.2. That's what we needed to go to intrinsically to know that, hey, they can't play any games with us on intrinsic value. time value can erode, but you can see it got to 181.4. This is why this chart, that's intraday. We're selling it intraday up just above 181, and it then reverses. Look what happens. It gives back all those gains to be back to that same rough area where we got in by the close of that next afternoon. So this is why we don't put trailing stops. This is why we don't try to do partial exits. We just say, look, take the double and run. And the bird in the hand is much more effective here than shooting for the 2 in the bush, meaning shooting for the, instead of going for the double. If you say, well, I'm going to go for a triple, I'm going to go for a bigger game opportunity. Well, you know, again, it's a limited time holding period. As Warren Buffett might say, we don't have as much runway here, right? We're basically looking at just the next couple of days, and preferably, like I said, that following morning follow through. Here's another example with a stock that looks like it's broken, right? With Apache, you got 3 nasty candles down there. And you're going, man, this is an energy and gas play, oil and gas. And you say, look, that thing's broken, obviously, right? Big, huge red candles. And yet, when you look at our setups here, look, the higher close on day 1, then the prior day, the second higher close, and then the third higher close. So you can see here that we look at those and say, okay, we're getting in here to Apache, and it's not as volatile of a name. It's trading just about 30 and a quarter. We're buying the 30 strike calls. We're getting in on, that was May the 7th. That's a Tuesday afternoon. We're getting out, in this case, on Friday morning, right? So this one, we needed a little bit more of that time, right? Because we buy it for half of a buck, meaning $50 a contract, control 100 shares, so it would cost you $3,000. We need it to go to a buck. Well, what's a 30 strike call intrinsically have to go to be worth a buck? It's got to go to 31. And you see, that's pretty much what we needed here, because it traded here to about 31.10. And then by the end of that Friday, it was back down to $30.38. So if you held it to expiration, your $50 would be worth $38. You would actually lose, in this case, right about just over 20%. So the thought is, let's not be passive. Let's be proactive and say, okay, we took that 100% gain right at $1,000 invested on 20 contracts. You make 1,000 minus at most a $40 commission for 20 bucks in, 20 bucks out on 20 contracts. Once you get active, by the way, you should be contacting your broker and saying, I want a $0.50, 60 cents as my option commission. That's where I'm at. And so basically it's something that every bit counts in terms of what you can keep. So basically it's never been a better time to be an options trader thanks to those low commissions with no ticket charges, right? You could do it with one contract at no more than a buck cost. So not every trade's going to win. Look, here's one that didn't work. Shopify. Thought Shopify looked really good here, right? The pattern looks totally fine, right? There's the first higher close looking backwards, the second higher close, even though it shows it was like basically barely a higher close. It did have that reversal happening. And then the third really big surge here is where we're getting in. Day 3. Stocks trading a little over 81, no more than 81.5. We're buying the 81 straight calls on day 3 of the setup for $1.41, 141 bucks a contract. So somewhere around 70 or 71 cents is your stop, right? We get filled at 70 when it did fall through a little bit the next morning. It opened a little higher, then it traded up to about 83. And you're like, oh man, you were in a profit. How could you let a profit turn into a loss? Well, we found that if you try to adjust these things too much, you'll whipsaw yourself out. And then basically we find it's better to just say, give it a chance to go. If it doesn't, take the 50% loss or so. In this case, we lost 50 1/3%. And you can see that's a $497 loss because we were able to get on 7 contracts in for like $987. So we're right at about a full allocation of dollars. That's going to happen. And so you have to be prepared for that. You can't get gun shy. What you have to do is say, if that's too big of a loss for you, then you have to say, okay, well, maybe I should be trading less contracts. What's the acceptable amount of dollar loss for you? If you say, well, if you're going to be willing to lose $200, that means you shouldn't be putting in more than $400, right? So you can adjust your size based on what your comfort level is. I always encourage new subscribers coming in to start small and build, right? So you could do it with as little as 1 contract, which, like we said, if you're investing, say a couple $100, you might lose $100 on $200 invested on 1 contract, give or take. You could theoretically lose all of what you put into any trade. If you got a big gap against you, it can happen, right? So start small, let the system prove it to you over time. That's what our objective is for new subscribers, to also turn you into subscribers who can be in the game for the long haul. with conviction, with confidence, knowing you're not going to overcommit your capital. I've showed you all call trades, but we can also do this with put trades. So here's a bear trade with CVS that looks like we're way late, right? It looks like we've missed 3 massive bars in the downside. But remember, as an options trader, your goal is to just get a piece of the action. You don't have to be a perfect call the top, call the bottom kind of trader. In fact, I remember John Bollinger at a market technicians conference saying his mentor told him he could only call the exact top and the exact bottom once. He decided those odds weren't very good for a trading career. And I think that stuck with me. It's like, yeah, good enough for John Bollinger, it's good enough for me to not try to pick tops and bottoms, and just let's just try to catch a sweet spot somewhere in the middle of the move to get a piece of the action, right? We have the leverage. We just need to get a piece of that move where we have confidence that we can get the follow through, right? So here's CVS on the downside. You can see we get our 3 bars lower closes with 3 really nasty momentum candles all closing near the bottom of their ranges, right? So there's day 3 and big red candle there. We're about 53 3/4. We're buying the 54 strike puts with just that's on a Tuesday after the Memorial Day holiday there. So you see really fresh examples here where you see what we've got a 54 strike put. It's about a quarter point of the money. We're paying 53 cents, $53 per contract. And so we need that thing to go to like $1.06. We get out at $1.10, which is just under 53 would be our target. You see the low on this thing was like 52 3/4. So you can see that's right where we're ringing the register and saying, just let's go ahead and lock it down at that double. We made 107%, it turned out, just over $1,000 gain before commission, right? So the idea is that we're all about kind of catch that follow through. You see it gapped in our favor. They're not always going to, but we believe this pattern really sets up really well for that. So again, reminding if you came in after we got rolling and showed this performance graphic that, again, past performance never guarantees future results. We know the future will vary. It could vary worse than this, or it could vary and be better than this on average, right? You can't make any guarantees about the future. But what we can assure you is we're going to follow the system. We're going to be systematic. As I like to say, the symbols will change, but the patterns tend to remain the same. So in this case, a $5,000 portfolio, putting no more than $1,000 per trade in would have made over 25 grand since the beginning of 2020. And you look and say, and we never compounded this. We kept it at the same 1,000, even on our most recent trades that have been closed out. So again, just always be sensible about what your risk that you're willing to take is, not getting yourself too high or too low. I think you'll find that it will serve you well. So, celebrating the success of this strategy, and as a way to say thanks to Dave and his team for having me in for this June Festival Traders kickoff here today. I've actually just approved an exclusive trading package to allow you to really get a great opportunity to try out quick options doublers for just the next 90 days, the next 3 months. So a lot of times we just sell annual subscriptions. We have limited spots on these before we shut the services down. But I'm giving you a chance to get started here and just try it for 3 months. I'm not going to say try it for a month, because I don't want you to just react to the next few trades. I want you thinking as I'm giving this a fair chance to try it over 3 months, knowing we might have about a trade a week. So over the next 90 days, you might get about, give or take, 13 trades, maybe 15 trades, something in that neighborhood, right? You're not trying to pay for a quantity of trades. You're paying, I hope, and realizing that our focus is on quality of trades. I would much rather have you have the best quality trades and have fewer of them than have a whole bunch of stuff that got thrown at the wall and a few things stuck, but a lot of stuff didn't, right? So we also give you a lot of extra resources here as part of this 90-day trial offer. You get access to my quick options doubler settings and rules sheet. So you'll learn the system. You'll learn the other little filters that I don't have time to talk about here to walk you through exactly what you need to do to execute it. You don't have to screen watch. We send you the trades real time when it's time to get in. We give you a lot of support as well. So the part of that support is that you get a dedicated email to me and my analyst team if you've got a question on a specific trade we called out. If you're not clear what to do with it, we'll guide you through that. But also, we've got our client care team standing by as well if you got a question about getting your access set up or whatever. I'd also do weekly video training. So I do that every Monday at 6 p.m. Get posted into your member site access so you can go in and actually learn while you earn. Now, added up would be $297 a month times 3 months would be an $891 value, plus all the support we're giving you. But we set up this Festival of Traders super special package here to say, okay, look, let's help you to take advantage of this at an even bigger savings. You get the educational resources, you get the system inputs and parameters, which is really valuable, so you can follow along as well. So scratch the $891. I'm going to do it for you today, if you act quickly, for just $177. If you think about that, over 90 days, that's less than $2 a day. And what we've done is we set up this link for you here. So it's members.bigtrends.com/quick. Okay, so note that it's not a www link, it's a members.bigtrends.com link. That's your members site access when you get signed up, but we set it up to get you thinking like a Big Trends member of the Quick Options Doubler program. So quick, it's all about speed of movement. That quick pop is what we're looking for. So when you go to that page, we set our pages up to be really clean and simple to help you take advantage of this. Let me pull up that page real quick for you here and show you how exactly that works. So basically all you'll do is you'll type it in here. Let me pull up off my Google page here. So type in members.bigtrends.com/quick, and you get this secure page that pops up. Like I said, we're in our 25th year of serving Big Trends clients. You know we're all about protecting your privacy and your information on the secure page. Also, you can get pop right over. The way I pay for most stuff online is PayPal. Click the PayPal link. If you've got a PayPal account, you can easily do that. Otherwise, put your billing information on the left. Make sure you get your email right. That's going to be the main way we're going to first communicate with you. And also, of course, on the phone. Mobile phones are ideal for this. The idea that, look, we'll help you to get set up with a smartphone update via WhatsApp as well. So like I said, we've already taken all promo code discounts down from the $891 down to just $177. That's more than $700 savings off of this 3-month 90-day access special. Notice, by the way, too, if you've got any questions, our 800 number's up here in the top right. It's 800 Big Trends. If you can't remember that number, just remember 1-800 Big Trends will get you to us. My client care team is also available through clientcare@bigtrends.com. And so just a reminder what you're going to get. You're going to get at least a trade a week, maybe 2 some weeks, where we basically will guide you through and look for these types of opportunities. Like the CVS example, where we popped it on the downside for that quick win right after Memorial Day. So the idea is that, look, this works on the upside and it works on the downside. It's not going to work every time. We'll tell you how to get out of trades that don't work too, right? Whether it's at a stop or if we hit to the Friday and it's like, hey, these options are going to expire at the end of the day, you know that we're going to tell you an exit by 3 p.m. that day, an hour to go before the market close. And we've got our team standing by if you've got any questions. So you're never left hanging. I see a lot of other services that do that. They basically fire out a lot of stuff, and then you're like, well, why didn't they tell me to get out? If it's a bad trade, hey, got to clean that up too. This is reality trading. It's not fantasy trading. That's why when you look at the past performance based on all these trades, winners and losers all added up. Every trade we called out, winners and losers before commission, before subscription investment, took a $5,000 account to over $30,000 with more than 25 grand in gross profits before that commission and subscription investment. So just remember, this special is only available for a limited time. You got to act quickly on it. And so what you do is you go to that link, members.bigtrends.com/quick. I see Dave has posted it in your chat, so you can actually click right off of that and go check it out. And it's real easy to get started. And call us or email us if you've got any questions. Know that we're always standing by during regular business hours. I let my team and I get a little recharge on the weekends and at nights, but basically the idea is that we're very committed to your success. That's why we've been in business 25 years and counting here at Big Trends. And we really value your business and value you having a great experience. So know that we're going to guide you through that every step of the way. And we're going to keep educating you, right? So it's not just about just firing out trades. We're going to give you a whole lot of education so you can actually learn how the system works to ultimately do it yourself if you want, but no, we'll keep firing out plenty more trading opportunities to you. So check it out right there, members.bigtrends.com/quick. I'm going to hand it back over to Dave so he can get you set up for our next fellow trader and great speaker. Thanks so much for having me today, Dave.
Hey, Price, I just have a quick question for you. What were your general rules on selecting an option? I thought your first example was at the money, but then some of these other seem to be cheaper than at the money.
Yeah, mostly, good question, Dave. We're mainly looking to get it somewhat in the money. So like the Spotify example was about 90% in the money, only about 10% time. But some of the other ones might have had like about 50% intrinsic value, 50% time. We're really very focused on trying to get that intrinsic value in most of the cases there. So I think the Amazon one was the only one where we probably had more time than intrinsic value because it's Amazon, right? So like we're probably not going to trade a name like NVIDIA with this system because you just pay too much for the options. We will never pay more than $10 or $1,000 for one options contract. So a name like NVIDIA with the run it's had, it did split. So maybe it's still, now it's back into the realm where it could be traded at $1,000 a share. Those type of names we won't trade if they're going to have too expensive of an option.